So let's now take a look at the signs of a bottom. First of all, I've got to say that these signs of a bottom are not predictive. We're not trying to look into a crystal ball and tell ourselves that we know what's going to happen 10 minutes from now or even 2 days from now. What we are looking for is a way to enhance our edge in the marketplace. Okay, so let me try and give a little bit of context for this first, and then we'll talk about some of these aspects as we move along. The first aspect of context that I want to give you, and what I mean by that, is really it cuts to the core of what technical analysis really is. Any kind of technical analysis is a look into the past. For example, this market, which isn't a very popular market for most people, but it's the pound euro, which is a currency cross of two of the largest economies in the world on a 60-minute bar, and it's not really trading right now, although the market is open. But for the next trade that comes across, that is something that's happened in the past. Meaning, what we are looking at on our screens, even if we're getting a feed directly from our brokers, is all information that has happened in the past. It's not real time. It's not going on right now. It's all stuff that's already been done and is furthermore being reacted to. You have to understand that. So no matter what we do to a technical picture, we are always going to be looking at prior data. Let me back this chart up. So as we're looking at this market coming down, there's no way that we can tell based on this one volume bar whether or not the market is going to reverse. Now I know I talked about relative volume, right? And I said that we should compare volume to prior volume in order to establish high, extreme, medium, and low. Now I'm not backing away from that. But what I'm saying is that even though I can see, let's just say for the sake of argument, that this line represents at 287 lots, that line represents the average number of lots per bar. Even though this line touches that average, that doesn't necessarily mean that it's enough to reverse the market. How do we know it's enough to reverse the market? Once the market turns around. Now you can see I've just clicked over 2 bars. We had one up bar with less activity, and then a down bar with an extreme reading in activity, or let's just say a high reading in activity. Now, even at this point, we can see, and if you remember, I formed the theory and put forward the hypothesis that in order to get a reversal, we need a down bar and we need high volume. Remember, I said that the reversal and the high volume will come in on the turn. Even at this point, we can't tell that the next bar is going to be up. Now, the next bar prints, and I see that volume has actually increased and has been increasing, even on a relative basis, with one exception.